first technical session for today's workshop, we have CA Gururaj Acharyaa, the workshop coordinator himself, as the technical session speaker, who will be touching upon the various provisions in the Companies Act 2013 pertaining to the internal financial controls, including the concept, scope, and applicability, and also he will touch upon the fraud reporting. Over to you, sir.
Check here. And before I get into internal, in fact, today I'm supposed to talk on two topics, and according to the time slot available to me, I've got only 15 minutes. Okay, so what I will do is I'll go on for half an hour, and then we will wind up for tea, and then depending on the next speaker's time gap, I will again pitch in and take up the incomplete topics. Now, before IFC, what I would like to talk about, maybe in 5 minutes time, is the latest developments, because this is an occasion for us to share the latest developments on Companies Act. With respect to accounts, 4th September 2015, there has been a small amendment in Schedule 3. What Schedule 3, erstwhile Schedule 6, requires the company is to state on the face of the balance sheet trade payables. We have already been doing trade payables on the face of the balance sheet, but on the face of the balance sheet itself, we are supposed to give the dues to micro and small enterprises and dues to other than micro and small enterprises. So this is one of the changes that has happened from 4th of September 2015. Thankfully, we would not have signed any balance sheet after that for financial year 14-15. But if at all you are signing for whatever reason after 4th September 2015, ensure that on the face of the financial statement you give this particular breaker. Now again, a word of caution is, if for non-compliance of Schedule 3, enough and more penalties have been prescribed, so much so there is an imprisonment of 1 year with a penalty of 1 lakh to 5 lakhs. So this is again a word of happiness for all of us. Okay. Now, having said that, from this year, from this financial year 15-16 onwards, everybody with respect to depreciation has to get into the component accounting. In fact, I had seen a lot of WhatsApp messages which said that Schedule 2 was optional for financial year 14-15, whereas that was not true. What was optional for 14-15 was component accounting and not the Schedule 2 application itself. So Schedule 2, which talks about the useful life of depreciation, was already prevalent for financial year 14-15. So for 15-16, for the first time, what is mandated is actually the component accounting. So one has to get into that. Now with respect to the audit field, the developments are, one has to note that auditor has to mandatorily attend the AGM. I am sure all of you would have done. If not, you should have taken the permission of the company not to attend. Now those of you who have attended, please ensure that your presence was, your attendance was marked as present. Well, that's a very important aspect to be noted. And those of you who could have sent your assistants who held valid certificate of practice. I mean, that's another requirement. You couldn't send any of your junior article trainee or whatever, but what you should have sent is the person with certificate of practice working with you or your partner could have attended on your behalf, and his presence should have also been marked as attended in the minutes of the AGM. So that's a requirement. And with respect to those of you could not, you should have sought the prior permission of the company. And what is meant by prior permission of the company is, whatever the company can do, the board of directors of the company can do. So that means the board of directors should have permitted the leave of absence as far as the auditor is concerned. So have that as a documentary evidence for you, the permission of leave of absence, and there you have sought the permission not to attend. Now the second important development in the field of audit is that whatever forms we have been using, SA 700, 705 and 706, is going to be thoroughly overhauled. And on 3rd December 2015, 14 days ago, the institute has placed the exposure draft of the revised SA 700, 705, 706 in the institute's website and has asked all of us to give our comments latest by 18th January 2016. So there are a lot of changes proposed in the formatting and the content of the audit report. this may not be immediately applicable for financial year 15-16 as I could see, because it has to go through some more changes by the time it takes concrete shape. It may take at least 2 years. But those of you who wish to be associated with the institute in the making of the SA 700, 705, 706 can have the pleasure of giving the comments and see their version in the final draft or the final version. One of the important changes there is an introduction of SA 701. SA 701 being the key audit matters. Key audit matters, there will be a paragraph on key audit matters where the auditor has to communicate key audit matters in his particular report. So what it is and how the entire formatting itself. In fact, the independent auditor's report, immediately it is followed by an opinion. I mean, unlike what is happening now, we give the opinion in the end. So probably people are not having the patience to read the report till the end. I mean, that's how it looks like. So they want to give the independent auditor's report and immediately the opinion and the basis for opinion and the key audit matters, then responsibility of the management, auditor's responsibility, and report on other legal and regulatory requirements. So that's how the proposition is for the change in SA 700, 705, 706 with the introduction of a new standard on auditing called SA 701 being the key audit matter. So this is the point number 2 on audit. Point number 3, I will also, of course, depending on the availability of time, be talking on fraud reporting. In fact, we have audit report and fraud report. You know, what is an audit report? A report given by an auditor is an audit report. What is a fraud report? So if you use the same analogy, it would mean the absolute bullshit there. So it is a reporting on the fraud by the auditor is what is fraud reporting. So we have a guidance note on that, and I have 3 slides only on that. I will be talking on that. And then we have the 4th, that is a topic for the day, whether adequate internal financial controls system is in place and operating effectively. Illustrative format has already been given by the institute. Long back it has been given. Let me take you through this straight away before I start my session. I will take you through the illustrative audit report format so that we are clear as to how the auditor has to report. There is no change. Mind you, whatever change I talked about 700, 705 with the opinion coming in immediately, that particular change is still in the draft stage. For financial year 15-16, that may not come through. So this is the report which was already published as an illustration some time back, a year ago, that was already published. So I am taking up that. That may have to be the audit report for financial year 15-16. So it starts off with independent audit reports. The template is already available in the institute's website. It's called the master template with IFC. To the members, report on standalone financial statement, management. So what will happen is there will be a CARO report and an IFC report. So to the main audit report, we have 2 annexures. CARO may or may not apply to all companies. There are companies to whom CARO is not applicable. So I am presuming that CARO is applicable. Then CARO report and the IFC report will be an annexure. To those companies to whom CARO is not applicable, IFC report is still going to be applicable. So IFC is applicable to all companies to whom audit report is given, and CARO report only to those who are exempt, need not be covered. So we have the same thing, management's responsibility, auditor's responsibility. I will come to the strikeout a bit later on, opinion, report on legal, other legal and regulatory matters. And 143.3 wants us to give certain specific comments in our audit report. One of the comment in item number G is what you are seeing there. This is how I am going to cover. Last year I did not cover this particular paragraph because it was an option given to me as an auditor. So this year I have to say, with respect to the adequacy of internal financial controls or financial reporting of the company and the operating effectiveness of such controls, refer to our separate report in Annexure A. So there will be, in my opinion, when you could call CARO as Annexure A and this as Annexure B. I mean, that will be a better way of telling it. But I think when this was made, CARO was a question mark, I think. That is the reason why it came in as Annexure A. So probably the way forward would be, there will be an Annexure A being the CARO and Annexure B being the IFC report. Other things being the same. But please note, I told you that I will be taking on through the striked out version of, so whenever I am commenting on IFC, in fact Mr. Girija Vallaban also referred to this particular point. Now what it says is, in this paragraph of auditor's responsibility, it is not just an insertion of the reference to IFC report. So for 15-16, two things have to be done. One is insert the reference to IFC report in Acharyaa or B as the case may be, and also ensure to delete certain lines inside the auditor's responsibility. In last year, why I use this particular under auditor's responsibility is, last year when we signed, in fact Mr. Gururaj Vallaban also talked about that. This is, in making those risk assessments, the auditor considers internal financial controls relevant to the company's preparation of financial statement that give a true and fair view in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on whether the company has in place an adequate IFC over financial reporting and the operating effectiveness of such controls. So last year we told this. So this year when I am commenting, I cannot say elsewhere that it is not for the purpose, so I need to delete those particular lines. So for financial year 15-16, it cannot be just a copy and paste of the last year's report and insertion of this. It is insertion of IFC reference and also deletion of those few lines within the auditor's auditor's responsibility. Okay, so this is what is the main report. The annexure to audit report will be the CARO. In fact, this is what it is. And then we have the annexure to the independent auditor's report of even date on the standalone financial statements of ABC Company Limited. So this is the audit report format given out by the institute in the guidance note. This is being given in the guidance note here, which talks about, this is a report which is very similar to our main audit report. It starts off with the report on internal financial controls under 143.3. First of all, then it says management's responsibility to internal financial controls, because we are saying that they are primarily responsible for the internal financial controls. Then auditor's responsibility. Then I am saying what is my responsibility. Then very interestingly, I am explaining the meaning of internal financial controls in the audit report. So meaning of internal financial controls or financial reporting. So we have changed in the institute from IFC to ICFR, internal control or financial reporting. So we will see that some of them call it as ICOFR or some of them call it as ICFR. I mean, we will get into that aspect. I am now saying that I will start with my report, I will start with management responsibility, auditor's responsibility. I am saying what is the meaning of internal financial control, because very importantly, a person who reads, who says that particular paragraph, that in the final opinion where I say everything is fine, the controls are all in place, the controls are all in place, should not for a meaning mistake that the future is taken care of. You understand that there will be no more frauds in this particular company, no more scams in this particular company. So a person who reads this should not get, I was always thinking that but for this particular format of audit report, how do I as an auditor, when I give, how is it being perceived by the stakeholders? Do they think that okay, everything is fine, so there cannot be any problem in future? So therefore the responsibility of the auditor is based on the perception of the reader, which becomes more and more onerous. So therefore what has happened is, our institute has rightfully thought that we will explain the meaning of internal financial controls, and then very beautifully they have brought in inherent limitation of internal financial controls or financial reporting. Now this is a very interesting paragraph. There they say, because of the inherent limitation of internal financial controls or financial reporting, this has a limitation. This has a limitation. What I have looked at is as at the balance sheet date. Okay, and based on certain samples, based on certain procedures that I have taken. So there is, even though I have done my job, there are certain inherent limitations in the job that I have performed, including the possibility of collusion or improper management override of controls. Material misstatements due to error or fraud may occur and may still not be detected. So I am saying this, also projections of any evaluation of IFC or financial reporting to future periods are subject to the risk that IFC or financial reporting may become inadequate because of changes in conditions, or that the degree of compliance with the policy of or procedures may deteriorate. So I am making this, I think this is the first time that the inherent limitation is brought out under a specific paragraph, and rightfully so. So with this, probably the perception element of the stakeholders. I always knew what this was, but the reader's perception probably gets, to that extent properly framed up. So that is the paragraph which is doing that. And finally, I give an opinion on the operating effectiveness of internal financial control. So this is how the format of the audit report is. Okay. So we go back to the basics. And one of the interesting questions that was to be answered is whether this is applicable to all companies. Should it be applicable to a one-person company? Should it be applicable to a husband and wife company? Should it be applicable to a elder brother, younger brother type of company? So this is the point on which the institute did not have a choice, because the format given by the Companies Act is that it is applicable to all particular companies. And my personal opinion is, yes, in a small company, the controls are that much more better because it is owner driven. It is supposed to be owner driven. So there may be the environment itself is such that the owner himself is the driver, and therefore everything is proper in that particular sense. Even then I will have to do my amount of checking and things like that. It may not be small entity in terms of proprietorship or one-person company and things like that. What I have to look into is the operations and the controls and the risks associated with that, and controls on that particular risks. So none of them have been given an exception. So everybody has to comment on the IFC. For CARO they have given exception, for IFC there is no exception. Okay, so that is one of the point to be noted. A wonderful guidance note coming out from the institute. Guidance note contents, I think somebody else will be talking on. Mr. Balaji himself, who is the author, will be talking on that particular thing. So this session will be dealing with the provisions in the Companies Act, concept, scope and applicability, need for evaluation, and fraud reporting. I may skip before T. I will come back in the end to talk about that. So and these, please mind you that these two topics, in fact today's entire topic was to talk about internal financial controls. Fraud reporting is independent of internal financial controls. Let's not mix up these two things. Fraud reporting is a requirement coming out of not 143.3 but 143.12. Section 143 subsection 12 says that every auditor has to, the moment he comes across a particular fraud happening in the company, he has reasons to believe, that's the wording that they have used, then he will have to report the matter with respect to the fraud straight away to the ministry, to the Secretary, Ministry of Corporate Affairs, in a particular form ADT4, time level specified as 45 days, give the time, first of all, before reporting to the management, before reporting to the Secretary MCA, you have been asked to report it to the management first, the audit committee and the board, give them some time of 45 days, and once they reply, 15 days thereof, even if they don't reply, 15 days from the end of 45 days, you will have to report the matter to the MCA. So this is the gist of fraud reporting, what is fraud and things like that. Time permitting, I will get into that. But otherwise, this is independent of IFC reporting. So internal financial controls, provisions in the Companies Act and applicability. So internal financial control reporting was always there from last year. So for whom was it there? It was definitely there for the directors, and for the auditors an option was given. As I already told you in the inaugural session, this option was never exercised by the auditor because we didn't have clarity. We wanted the guidance note to come out and then only to comment. So but now there is no more deferment. We have to comment on this particular thing from this year onwards. So what is the director's responsibility statement? This is very interesting. So director's responsibility statement, section 134 subsection 5 clause E, which is applicable only for listed entities. This is a weakness of the Companies Act, whereas the directors of only the listed entities have been asked to comment on IFC. The auditors of all companies have been asked to comment on IFC. Okay, what is the director saying? The director has laid down IFC to be followed by the company, and that such IFC are adequate and were operating effectively. So only the directors of the listed companies. Then subsequently what has happened is, in the rules they brought out in a very confusing way. If you read rule 5, Rule 5, it says in addition to information and details specified in sub-rule 4. So in addition to what has been told in sub-rule 4. Let's read sub-rule 4. If you read sub-rule 4, it says every listed company and every other public company with paid up capital of more than or equal to 25 crores. So the question that came before us was, sub-rule 1, 2, 3 was applicable to all companies. 4 was applicable to listed companies and companies, public companies with more than or equal to 25 crores. Now, in addition to information provided in sub-rule 4, so some of them have been interpreting to say that this is also applicable. Sub-rule 5 is applicable to only those cases where sub-rule 4 is applicable. So that is a dilemma. So if that is the argument which is taken, then only such companies will have, directors of such company only has to give this particular statement and not the other companies. Whereas the exception to the auditor is not there. Every auditor of every company, when auditor of every company, be it a OPC or a private limited company, has to comment on this. So our institute also, when the guidance note was being made, I have read that particular thing. I mean, wherever it is slightly, I think they have taken this particular dilemma into account and shaped it accordingly. But finally, one very important thing that has been told in the guidance note is, be it as it may, as far as the director's responsibility statement given to the world at large, as far as your documentation is concerned, you as an auditor, because again a very interesting thing which comes out is, my audit report is signed first, and then the directors are saying, now assume that I say that the controls are okay, and the directors say the controls are not okay. I mean, for a moment, a very theoretical type of situation. So there it will be an embarrassment for the auditor, and maybe, so therefore what is told again in the guidance note very beautifully is, whatever it is, you take an assertion from the management, because your report is preceding their report, what they are going to say, and take a statement that internal controls are adequate and operating effectively from their perspective, of course supported by all the documents. So once you do that, then you go and comment on your opinion so that there will be no mismatch thereafter. So that's what is told there. So as far as auditors are concerned, every company, now I have to state whether the company has adequate internal financial control systems in place and the operating effectiveness of such controls. Now this we have already seen, the genesis of 143.3. Now this requires some amount of discussion. The internal financial controls has been explained. What is internal financial controls has been explained for the purpose of director's report as an explanation in 143 subsection 5 clause E. What is internal financial controls? Internal financial control means policies and procedures adopted by the company for ensuring orderly and efficient conduct of the business. For ensuring orderly and efficient conduct of the business, including, that is, the policies and procedures are all in place to ensure orderly conduct of the business, including adherence to the company's policy, safeguarding of its assets, preventing and detection of frauds and errors, accuracy and completeness of accounting records, and timely preparation of reliable financial information. Now these are the 5 points which are specifically told, apart from the general thing that policies and procedures. Now if you look into this, is the auditor, is all of this coming within the domain of the auditor? Now if you look into those aspects which have been written in red, adherence to the company's policies, there may be certain policies which are beyond the jurisdiction of audit. Okay? So therefore, then prevention and detection of frauds and errors. This is again, the preventing the fraud is not in the hands of the auditor. Of course, there are policies and procedures to prevent. That is how it should be read. But having said that, these are things which are beyond the auditor's perspective. So what our institute did was, when the guidance note was made, we wanted to dilute this particular aspect from the major aspect of internal financial controls to the internal controls over financial reporting. So we have restricted ourselves in the guidance note not to every aspect of the internal financial controls. That means internal financial controls is a bigger game. I am taking a part of it for the purpose of internal control or financial reporting. Now one may say, what is the authority for the institute to dilute this particular thing from the total to a part of it? The statement that was taken was wonderfully explained by Mr. Balaji to say that if you read explanation to section 134(5)(e) is that they said for the purpose of this section, internal financial control means so and so. And when you go into 143(3) where I am supposed to report under 143(3) where internal financial controls has not been defined. So there our institute said for the purpose of 143(3) I will restrict internal financial controls only to the extent of it affecting my financial reporting. So that is how the bigger picture or a bigger responsibility has been taken by the audit, by the management and the directors, and a part of it has been taken over by the auditor now. So interpreted by the institute as internal control or financial reporting. For all our discussions, we will be referring it to as ICFR or ICOFR. ICOFR is internal control or financial reporting. So reported in the audit report, we have already seen. So in the audit report also, I am not saying with respect to the adequacy of internal financial controls and operating effectiveness. I am very specific in using the word internal financial controls or financial reporting. So I am bringing those three letters to say that it is only restricted to financial reporting. So the list of illustrative formats we have already seen, it was all given. The first illustration itself, what was given out in November 2014, has this particular format which we just now saw. Okay? And this also we have already discussed. WASB has come out with this particular revised 700, 705, 706 with 701, which has to be commented upon latest by 18th January. So this is a slide which talks about what is internal financial control. Subsequent speakers also may talk about that. So internal financial controls has three elements. Internal financial controls, the management aspect of it has got three elements. One element is ICFR, the other element is the operational control, the other element is the fraud prevention. So this has got three elements, and auditor has taken only 1/3 of that. I mean, it may not exactly be 1/3 in that sense, but he has taken 1/3 portion, a part of the IFC for his particular purpose. So what it is and things like that will be explained subsequently. This is just a pictorial representation for us to understand that I am not assuming the entire responsibility, rather I am resuming a part of the responsibility. Internal financial controls or financial reporting. What does this mean then? If it is only 1/3, now I am explaining that 1/3, what is my responsibility as an auditor. I have defined what is internal financial control has been defined, or financial reporting, following also reiterated as, look at this. I am going to, if you saw the particular audit report on IFC, where I said what is the meaning of internal financial controls or financial reporting. I am saying the same words. It may not be in this diagram, but I am telling it in the form of a statement there. Internal financial control or financial reporting means a process designed to provide reasonable assurance, an assurance with some reason, regarding reliability of financial reporting and preparation of financial statements for external purposes in accordance with GAAP. So this again has got three elements or three components, you may say. Maintenance of financial records. The financial records are properly maintained. All the transactions have been properly authorized. The transactions which enter into the financial statements are all properly authorized, and then the assets which are actually present in the financial statements are all properly safeguarded. So this talks about only these three elements of maintenance of financial records, authorization of transaction, and safeguarding of the assets of the company, which comprises as ICFR. So what is beyond this is operational control and fraud prevention. So these are two things which are not within the domain of the auditor, rather that of the management itself. Okay. So this has got a lot of process which one can definitely the subsequent speakers will talk about that, but I can explain IFC. And as I was telling before Balaji takes off, you didn't hear me talking. If one reads this particular book, initially he feels that he is reading some chemistry or physics or some scientific subject in that sense, and finally he realizes that he is reading pathology. Okay. But one of the grows I have, since he is the co-author, I can always have the grows. Throughout, they have used the word, the auditor has to do this, and he bar she can do this. I mean, I would have been very happy if you had said she only. You know, Because he or she goes on coming in so many. I wanted to do a search. Maybe I can ask Ashok, do a search of he and she. If it could have been avoided, maybe some 3 or 4 pages could have been saved. Not only that, see, first of all, I am reading it with a vengeance, that you are taking my family time and things like that. And then he or she, because she anyway has he in it. So I think that could be a suggestion for the future making. I'm sure you have your, or somewhere, I don't know, even the Companies Act, Ravi, you must tell me whether he includes the she, must have been defined. In so many places they include. I think one statement like that would have, or she includes he, no. That would be a better statement to make. Now, if I can explain IFC in, there are a lot of processes, but if I can explain IFC in very, very commonsensical way, we can only say that one has to assess the risks, the various areas where the risks are possible. When you think of a hotel, the server can give the food to the, I think Mr. Girija Vallabhan was telling that, food to the customer, and the money he gives puts into the pocket. So how do you control this? There should be a KOT, because I come from a hotel business. So KOT, then the order that based on this KOT, I given the coupon to the cook, and the cook gives me the food, and then, so there is a control. Finally, the track from the order to the payment receivable. So there must be a track of the whole system, not just the financial aspect of it. So go beyond the things. So assess what is the risk. It's very beautiful to tell what is the risk. Assess risk in simple terms means what can go wrong. I think if we can understand this, we have understood IFC. What can go wrong is the risk that I have to pitch in. First understand. Once I understand what can go wrong, how to ensure that what can go wrong can be controlled. So I will design controls. And thereafter what I do is, I don't just have controls and leave it like that. I will have to keep on ensuring, testing whether these controls are properly implemented. So these are the 3 simple steps, commonsensical. Okay, but for this common sense you need tremendous amount of experience. That is the beauty of it. Okay, so I have put it in my own way. What is the difference between a regular audit and an ICFR? Okay, ICFR is certainly a value-added audit. Let me tell you, ICFR is a value-added audit. It is not, so all the companies, all the representatives, there are auditors, I know there are auditors and auditees here. I request all the auditees to see the value in this particular audit and therefore ensure that the management pays for it. Now, which is also very important. Otherwise, I give value but you don't see the value. So you must see the value in it and also ensure, and please the auditors also must be what should I say, sensitive enough to charge for the value addition that has been given. So the difference between regular audit and ICFR is, regular audit is more substantive, ICFR is less substantive. That means I don't go only by watching and bills like that. Begins with sales invoice, goes from the sales order back to the collection. If I am taking a simple example of sales, it could be similarly for purchases also. So deals with finance and accounts, here it goes beyond finance and accounts. Here in the regular audit I ask questions, in the ICFR I ask probing questions, irritating questions. Okay, so that is a type of, and for the regular audit I can send my articles. For the ICFR I have to send only senior assistants. And in the regular audit, it is what is wrong only gets reported. And in the ICFR, what could go wrong could get reported. So that is the fundamental. So you want to know what is the need for ICFR? It will be available in the thing. I can only say redesign, standardize, transparent operational management, senior management, compliance to law, reliable financial statement, support to the CEO, CFO certification, audit becomes more comprehensive. Finally, I can only say that with the IFC reporting, the stakeholders will have great confidence in the financial statements. Not only that the financial statements are sound, but the environment in which it is going to happen ensures that the company will go on forever. As he was talking, Mr. Girija Vallabhan was talking about Enron. Now, if you had seen Enron's balance sheet just before the scam had happened, no comment on going concern. Very next year, the going concern was gone. So probably an ICFR reporting will add that much value to the going concern without saying that the going concern assumption is at stake. So ICFR adds a double underline to the assumption of going concern itself. So fraud reporting, I will come back and talk about it. I will end my session with a thank you, and we will wind up for tea. If it should be ready, right? Huh? In 10 minutes? It's already ready. Okay. So 11:30, 11:45, we reassemble. And before we reassemble, the chairman has asked me to talk about 3 things. One is, all the PowerPoints of the day will be made available on the institute's website. Point number 1. Point number 2 is the registrar of companies is coming. He is again a dignitary, because these are all people who, I mean, if we are professionals, they are the umpires who will declare whether the professional is out or not out. So therefore, it has been our endeavor in the branch to involve as much as possible the people who are on the other side of our profession. That means who are the receivers of our services in that sense. So we have been trying our best to call the C&AG, the Chief Commissioner of Principal Chief Commissioner of Income Tax, and this evening the Registrar of Companies. It would be very nice if most of you stay back. I know that you will have, even if you have to feel like going back, you can send some of your other people connected therewith. Ensure that they are there in full attendance, so that he carries home a big impression about our profession. Because please mind, there are competing professionals. So keeping that in mind, we will have to ensure that we have solidarity, and that is exactly the reason why Mr. Allama Prabhu was telling that we would not only like to invite them, honor them each time, because they carry home a good impression, not about Allama Prabhu, not about Bangalore branch, but about the profession at large. See you at 11:45.